Hi, I'm Adva Saldinger, a senior reporter at Devex, and you're listening to a special edition of This Week in Global Development, tied to the World Bank International Monetary Fund annual meetings in Washington, D.C. The annual meetings taking place this week are a critical temperature check on the reforms at the World Bank, which range from incorporating climate change into the bank's mission to streamlining the bureaucracy and finding ways to lend more with the funds it has. In these next few episodes, we'll be exploring how these now 80-year-old institutions must change to address the challenges of today, including reducing poverty, addressing climate change, and pursuing gender equality. The World Bank meetings have wrapped up, but there's no rest in sight just yet, with only a few short weeks before the COP29 climate conference in Baku. So as all eyes turn to climate, we wanted to dive into how the multilateral development banks could do better in their approach, policies, and programs when it comes to addressing climate change. In this episode, you'll hear from Pepukaye Bardouille, director of the Bridgetown Initiative and special advisor on climate resilience to the Prime Minister of Barbados. You'll also hear from Warren Evans, who has a long career working on climate issues at MDBs and recently left the post of climate envoy at the Asian Development Bank. Hi, I'm here with Pepukaye Bardouille, who's the director of the Bridgetown Initiative and a special advisor on climate resilience to the Prime Minister of Barbados. Pep, thank you so much for being with me today.
Thanks so much for having me, Adva. It's always good to chat with you.
Yeah, so, what I really wanted to talk to you today, we're obviously in this moment where the World Bank is having its annual meetings. Most of the major multilateral development banks are in town, and there's a lot of pressure from shareholders on all of them to do more on addressing climate change, from mitigation to adaptation. And so the first question I really have for you is, how would you sort of score these institutions on how they're doing climate finance today? They've made some announcements on how they're changing the way they think and look at climate, but what sort of report card would you give them today?
Gosh, I always believe in grading on the curve. I'm not sure that anyone should have, a single grade, but I would say this. You're absolutely right. A lot has happened over the past few years. The World Bank Group, together with other development banks in regions, have, I think, been trying to push the envelope in a few areas, and I do want to give credit where credit is due. Over the past year, we've seen progress on natural disaster clauses or climate resilient debt clauses. Just this past week, the IMF announced some changes to their policy on surcharges, and just a couple of days ago, the World Bank announced some changes to their equity to loan ratios from 19% to 18%, so that's all great. I think, though, that there's quite a lot more to do. So I'm going to elegantly dodge your question on scorecard and say there's good intention, there's progress, and I think that we are all trying to pull in the same direction, but there's an awful lot more room for maneuver, and I think a lot more room for risk taking. And so I would say that while the banks are doing, and the IMF are doing a number of things that show that they're with us, I think they also have to ask themselves the question, how much more can be achieved if we change our risk perception in terms of what the markets, what the credit rating agencies will allow, and if we change our own way of operating, which is to put a lot more in the hands of countries, and I'm sure we're going to get into this in a minute, so that it's not just a supply-driven, but a demand-driven and a bit more of a partnership in terms of their approach. And that's where I think a little bit more creativity and, a little bit more brave behavior is necessary.
Yeah, I think one of the questions that I've been thinking about is, they have made a lot of these announcements and commitments, and I think a big piece of the question is the money actually getting to those places today? You talked about the change in the equity to loan ratio. And one of the things that's interesting is that if you actually look at IBRD, it isn't using that headspace that it says is available. The equity to loan ratio for the last fiscal year was 21.5%. So the bank has said it can now go down to 18%, but it's not actually using that fiscal space yet for climate or for development objectives. And so I think one of the questions is, how quickly can these institutions sort of meet those commitments? And I guess one question for you on this issue of sort of taking risk or taking things on, what are there specific things that you think these institutions could do differently, policy changes, instruments, etc., that would lean into that risk, that would actually sort of move the needle on the type of financing that they're providing to address climate shocks?
Absolutely. I do think there are a number of things that can be done, but before getting into those, maybe let me try and present a balanced view, right? So for those who know, I come from the World Bank Group. Historically, I've been part of the institution, and I try and present a picture that is as fair as possible in terms of, again, I will talk a lot about supply and demand. So I think that one thing that we often don't look at is how quickly can high quality projects, public or private sector, be developed, and to what extent are we seeing those projects kind of come to fruition. And if they're not being developed fast enough, one could argue that you're actually not able to get loans out of the door, right? Because they don't exist.
And in fact, that's what Ajay Banga said when I asked him this question.
Oh, interesting. Oh, that's very interesting. I haven't spoken with him, so maybe this is an opportunity for us to have a conversation. But look, I mean, I come from the private sector side, where I will tell you that the IFC, IDB Invest, and frankly, pretty much any private sector institution would put as much money on the table as they can and do as many deals and transactions as they're able, but often that pipeline is not there. So I do think that that's important, because you want, again, high quality. It's not just a quantum. It's the types of projects that don't just get money out of the door, but have impact on the ground. And that requires thoughtfulness, right? So the World Bank Group and other institutions are very well known for their focus on environmental, social, and governance. That's part of the story. But the other part of the story is making sure that projects don't just look good on paper. They're, large dollar figures attached to them, but they're actually impacting the people who we are trying to reach: schools, hospitals, nurses trained, roads built to standard. And when you bring in climate to the mix, I think that looking at the interlinkages between sectors is critical. So it's not just about how do you do more power lines, how do you underground those power lines, how do you do them in a decentralized way. And I suspect that that takes a little bit more time. So I want to give, again, a little bit of grace when we think about why money doesn't move as fast as it needs to. So that's a piece of it. But I also think that, having the right instruments is key, and not getting tangled up in, projects have to look a certain way or have to tick a number of boxes is kind of a bit of a challenge still. So there are instruments that I think could be expanded. If we look at Hurricane Beryl, of course we could talk about Helene, we could talk about Milton, but specifically, in the developing world, which struck the Caribbean in July this year. Tremendous amount of loss and damage from Barbados, which was hugely affected from coastal flooding and storm surge, which affected the entire fishing fleet and a lot of the tourism assets on the coast. Jamaica similarly pummeled. Grenada and St. Vincent, where entire islands were wiped out. The World Bank has several instruments that are intended to deal with post-disaster situations. The CAT DDOs, Catastrophe Deferred Drawdown Option, is an instrument that works very well when you have it in place. But only one island had it in place, which was Grenada. So Jamaica, Barbados, and St. Vincent weren't able to benefit from this instrument. How do we make instruments available so that you don't have to jump through hoops and try and understand what's on the table? How do you almost make it, and I kind of equate this to having a line of credit in my bank. I actually didn't even know I had a line of credit until I bounced a check. I mean, essentially it comes into play. So how do you make these instruments much smoother to take up and a lot less confusing? Because it really, from a government side, it's very, very difficult to try and understand what's available, let alone make sure that you have the capacity to get these things signed on, that you go through your hoops internally within cabinet. So I think, again, this is about the bank operating in a way, the bank group operating in a way that's almost, default. Things are in place at a universal level. you have availability to benefit in the case of post-disaster financing from concessional terms. If you are doing the right thing, you get rewarded for that. And again, that's where I think there's scope for adjustment. It's not just tweaking on the margins, it's rethinking, putting yourself in the shoes of a developing country that's borrowing. This is a little bit of a sidebar, but if we think about insurance instruments that are available, one would often say, well, we have CRIF in the Caribbean. Look, I was in Dominica when Tropical Storm Dorian passed through the Caribbean, and it sat on top of the Bahamas for 3 days, literally like a washing machine. And I remember distinctly opening the newspaper and seeing what the payout was to the Bahamas. And it was something like 12 and a half, don't quote me on the exact number, it was under $20 million. And you think, look at the devastation. So the instruments are there, but again, when you trigger them, do they give you what you need? Are you able to trigger them? And in the case of Jamaica, which had a catastrophe bond, it missed it. In the passage of Hurricane Beryl, it missed it by a hairline, and so Jamaica didn't benefit from an instrument that is technically available.
Yeah, no, I think that's a good point, that sort of mismatch between availability and actual usability.
Exactly.
We've talked a lot about the World Bank specifically, and so I wanted to ask about the MDB system as a whole, because I think this goes beyond just what the World Bank can do. Obviously, it's the biggest. It often sets the tone for other institutions, but we are seeing some creativity happening at some of the regional banks as well. I know ADB has done some interesting things. IDB as well, also is going through a whole sort of reform process and a new strategy that was approved last year. So what do you make of some of the other MDBs? Are there things that the World Bank can learn from some of the regional institutions and bring in? And how can the institutions work better together on, setting climate targets? I know that's one of the things they've said. They're going to work together on sort of the data side, on some of the target setting. So what do you know about how those conversations are progressing?
Look, I think it starts with country-led and truly accepting that countries have got to take their destiny into their own hands and be supported in doing that. And I do believe that the World Bank Group, along with many, many of the other development banks, again, have the right intention. But the way the systems are set up, they tend to be supply driven. So, we're going to come on a mission, we're going to sit with the government and kind of talk to the government about what we can offer them, as opposed to let us understand from the government's perspective what their vision is. They may not have the snazziest plan for the next 5 or 10 years, but taking the time to work and develop with government ministries, with line ministries, with ministers of finance, a deliverable action plan is the starting point. And if you don't do that, you end up again in some instances, a hammer looking for a nail. In other instances, offering things to a government that provide some sort of benefit, but again, are not absorbed and really driven by the country. So I think that is the starting point. The second thing, and here I'm really going to be open and candid and call a spade, which is, I mentioned earlier that pipeline of projects. It's often thinner than ideal. And that means that you see on the ground development partners from a range of institutions, and again, this is a general observation, sometimes coming into a country and trying to find space for themselves, as opposed to asking what needs to happen and apportioning projects or interventions to the appropriate player. And I think we often use the language of, there needs to be a little bit more coordination, or development institutions need to, have some sort of, weekly meeting where they talk about things. But again, I think it comes from what are the incentives of an institution to collaborate. If the incentive is effectively, I give you a deal that I would otherwise book, it's not an incentive, that's a disincentive. So it's really got to be, maybe you can double book things. I'm not sure what the exact answer is, but I will tell you that anyone who has spent any amount of time in government in pretty much any country knows that there is a challenge with development partners, in some instances tripling over themselves and not really asking themselves why they're there. It's an industry like any industry that has its own internal targets, and those targets don't always align with what a government needs to get done on the ground.
Great. Well, I think you've given the MDBs some marching orders in terms of changing their risk perception. Working more closely with countries and really thinking about instruments that are fit for purpose almost by default and are just easier to access and use. So, Pep, thank you so much for sharing your insights as always.
Thank you so much for the opportunity to chat, and I guess we'll be speaking again soon.
Yes. Pep has provided some food for thought, be it embedding bank staff more closely in governments or ensuring that products are actually accessible and usable as countries face climate shocks. I also spoke with Warren Evans, who had some practical steps he thinks MDBs should take to address the climate crisis, both when it comes to adaptation and mitigation. Here's that conversation. Hi, I am here with Warren Evans, who until recently was a climate envoy for the Asian Development Bank. And Warren, I'm really looking forward to chatting with you today, so thank you so much for joining me.
It's great to be here. Thanks.
So, Warren, you've had a long career both at the ADB and the World Bank and elsewhere, working for much of that time on climate issues. And so I want to get a sense from you. There's been a big push in recent years around reforms to make these institutions bigger, better, have a greater focus on climate. Give me a sense of, how you think these institutions, these multilateral development banks, are doing in terms of their climate lending. Are they doing enough? Are they doing the right types of lending?
Well, I think the there's been a lot of progress, and it has had its ups and downs depending on leadership of different institutions. Um, in general, we're going in the right direction in the sense that the particularly the big MDB, the main MDBs have shifted from a lot of small scale, very interesting, very locally impactful investments um, to larger scale, longer term commitments, many policy based loans focused on climate change that really can have a tremendous impact on both sovereign and private operations in the countries. Um, so I think we're moving in the right direction. The We still need to go larger scale, and we need to accelerate. We need to be more leaner and meaner, more cost effective, which is common knowledge, but seems very very difficult to overcome some of the hurdles that MDBs have. Um, and I think we have to think longer term. We still tend to have 3 year pipelines, maybe 5 years. We should be thinking 10 years. We need to be thinking at scale, and we have to build much more solid partnerships at the country level to be able to get that scale. So, the World Bank, ADB, none of us can do this by ourselves. No bilateral can help a country to the extent that developing countries need help to go both low carbon and to become resilient to climate impacts. So I think we've got to get smarter about partnerships and much larger scale, longer term in what we're doing. But we are going in the right direction.
Great. Well, maybe let's dive into some of those issues. When you talk about larger scale, what do you mean? What are the types of instruments, projects, et cetera, that these MDBs need to be looking at and doing? And is it less piecemeal, more, platform approach where they're trying to replicate similar things and move faster in that way?
Yeah, well, all of the above. When you're looking at finance, it's the scale of finance, which means we have to continue to innovate. And as you know, the ADB just is about to have its first deal under IFCAP, the Innovative Finance Facility for Climate in Asia and Pacific, which builds on guarantees from participating donor countries to, for the first time, it carves out part of the ADB portfolio, the existing sovereign portfolio, and allows ADB then to essentially get 4.5 times leverage on the guarantees that are provided. So it's a great way of leveraging funding, and we can go into that in some detail later on because it actually is much more exciting than that. But it is innovative, and there are other innovations that are ongoing. I think we're on the finance side, the challenge is still how do you really get to scale with mobilizing private capital? And I mentioned earlier the policy-based loans on climate change. These actually can have a huge impact on mobilizing private capital by getting the policy and regulatory reforms at the country level that are needed to enable the private sector to come in. But we need de-risking facilities. We need a lot of things to make this happen. At the actual investment level, I think that if you're talking about, it depends on where you are. I think the energy transition mechanism and the jet Ps that are fairly well known are the right way to go in terms of large scale, rapid rapidly moving away from coal-fired power and enabling renewables to take its place and to have a just transition. Um, that is difficult, it's challenging, but it's moving forward, and that is the kind of scale we need in terms of reducing GHG emissions, greenhouse gas emissions. On adaptation, it really depends on where we are, and I think that the key there, often the investments are going to be relatively small, but they are piecemeal way too often. And what we need to do is be much more strategic. And by that, I mean actually have a plan. We need to think, what are the biggest risks over the next 10 years in country X or a part of country X, a highly vulnerable part of country X? Um, what are their greatest needs? What's it going to cost? What kind of reforms are required to make it happen? What kind of funding is required over the next 10 years to make it happen? And then get the donor partners, the development partners together to enable the country to actually roll out a program where it invests in the whole 10-year program. It knows that they have enough funding. So it is a platform type approach, which I think is a wise way to go. But we need to be thinking longer term to get scale and speed on building climate resilience.
I know you've been involved in a lot of projects over the years, but what do you think is the barrier right now to MDBs working more effectively with countries and doing the type of planning that you're talking about?
Well, there are a few. I mean, the primary barrier is that we do serve the countries, and they are run by politicians who have a certain shelf life, and so we tend to be talking to ministers of finance, for example, who know that they're only going to be there for 2 or 3 or 4 years usually, and so their outlook is relatively short term. Um, we need to overcome that and help them to think longer term, to see the benefits of longer term planning and the upside politically, if necessary, for them. And countries have done this when they build major road programs or long term investments, major flood control programs, urban programs. These are long term, long lived investments, and so it can be done. But we need to convince them that it should be done on climate, both low carbon and where you are a major emitter on GHG emission reductions at scale, and but particularly on building resilience and adaptation investments. The the barriers are that we've been doing pretty much the same thing for a long time, and individuals and institutions are pretty similar when it comes to changing the way they do things. We're reluctant to do that by nature, and so it requires real strong leadership and a demand, I think, from our clients, from the countries, that says, look, you know, we can't use your help as effectively if we continue doing this relatively short term investment planning. We need to think longer term. So it takes two to tango here, and I think that we need pressure from our client countries, but we also need internally a recognition that if we continue doing the programming and the project development planning the way we have been, then we're not going to succeed at getting the scale we need on climate action.
I think you've laid out a couple of things over the course of our conversation, but if you were to sort of give marching orders to the MDBs, like here are the 3 or 5 things that I want you to do to improve climate finance, how would you explain that?
Wow. Uh, I think that first off is to I mean, part of this is conceptual. Don't, climate finance is it's not an either or when it comes to mitigation or adaptation. We have to be doing both, um, and we have to set priorities, but it's not an either or. Um, we have to do much more, I think, on the adaptation side in terms of, as I mentioned, to better understand how to make it effective and get the funding out there through the development process. Um, I think we've got to get much more lean, and we have to figure out how to use that sovereign money to really mobilize the private capital required on mainly on the mitigation side. And so, in a sense, our my friends, and I used to do this. I used to be a team leader doing projects. We're very good at sovereign operations. We need to change into investment bankers. We actually need to be thinking about not that, excuse me, that investment project in conventional terms, but how can I take that $1 billion of sovereign lending and turn it into $10 billion of private capital going into renewables or batteries or e-mobility or whatever. How can I make sure that there's adequate investment in just transition with fair share for the private sector? That's a different mindset than what a traditional development process follows. And I think that that's going to take time, but I think that we've got to start making that shift. So that would be one of my demands. The other demand is going back to the time frame. We have to get more strategic and long term and have more effective partnerships, recognizing that at the country level, in a developing country, we need to be able to offer them our support collectively as development partners for a long enough period of time at a scale that they feel confident they're going to be able to invest over time in the highest priority issues, um, sectors, whatever. And that requires a level of flexibility over time because it will change, we'll learn. But we need to be doing that now. And it is happening in some countries. But I think, to me, that's probably the most important thing. The third thing, and the last one I would insist on is many years ago, when I was a young team leader on projects, we did sector strategies for every sector in a country before we had any lending in those sectors. And somehow in the early 2000s, the MDBs sort of dropped the ball on sector strategies. It's come back now, partly because of the recognition that to understand the risks of climate change, we need to go upstream, so-called upstream analytical work, and better understand what the risks are at the sector level. So I think that, and the World Bank through its, the climate development reports. I can't remember the full name. That's exactly what we need to be doing, but we need to drill down much more and actually use that as a basis for long-term strategic planning. That needs to be front and center of all of our operations before we get into the downstream stuff. And it's improving, but we need to invest a lot more on that.
Great. Well, it sounds like you have some tall asks, both on sort of systems change and some cultural change at these institutions to be more effective and more efficient. Thank you so much for sharing your insights with us today, Warren. It's always great to speak to you.
Thank you. Good seeing you.
Thanks for listening to this special episode of This Week in Global Development. If you enjoyed this episode, please share it, or you can leave us a rating or review. We'd also love to hear from you if you have any feedback or want to get in touch. You can find me on social media at Adva or send an email to podcast@devex.com. Be sure to sign up for our daily newswire and our Invested newsletter, which covers development finance, for more of our must-read insider coverage of global development.